Hello traders, it's Samurai Trader. Welcome to this video. Normally I don't have the camera on, so I thought I'd do something a little different. In today's session I was trading the 6-tick NQ Renko. It was actually during the London Open, or just after the London Open. So traditionally you'll see me usually trying to get away with trading a 4-tick Renko, which is a lower time frame, which also means a smaller stop loss. However, quite often in the London session leading up to the open of the New York session, the market will really pick up. So we're going to review the trades I took and some potential trades that just before I started trading that you may have taken, and I'll be explaining these setups in detail. So as I state here on the screen, you can apply these strategies to any market, whether you're trading stocks, futures, or forex. My sessions are real and unedited, so I'm not running to a script or anything like that, and today's session is 102. So I do need to get the disclaimer. If I can just click on that, hang on. Whoa, I'm gonna have to just what I'm gonna do, I'm gonna pause this because the camera's in the way. That's better. Now I can pull up the disclaimer. That is, the view is in the way. So traders, there is a risk in trading. Don't trade with money that you can't afford to lose. Very important, stay on the simulator until you're consistently profitable. And that's one of the great benefits of most trading platforms today, and that is that we can trade on the simulator until we build the confidence to start trading a live account. And I'm going to briefly be discussing too, rather than jump to a full contract, why not start by trading a micro account. So I'm going to briefly cover that with you today. Just a very quick advertisement. If you haven't already requested, please down below you can download my ebook, The Truth About Day Trading. Make sure you hit subscribe to my videos so you can be kept up to date. So as I said, this is session 102. So I bring out generally 2 or 3 sessions each week. Better still, come and join myself in my live coaching room. So I run coaching sessions every week, and I also run a live trading room. So traders, for $197, a once off payment, you get lifetime access to all of my indicators, the members area. There's actually over 35 different PowerPoints. There's hundreds of hours of recordings. Now the great news is though, you don't need to study them all, because if you're a brand new trader, or if you've been struggling up to now, we want you, or I want you, to focus on just a couple of setups, trend following strategies, which I'll mention in today's video. So you can get all of that for $197, and included in that $197, and perhaps I didn't mention that, is 8 of the live coaching sessions. So every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. Eastern Standard Time, I run 2-hour sessions where I'm teaching my members how to trade live. That is, the setups, I'm explaining those step by step. I'm explaining the psychology of trading. I'm going into what else do we go into, you name it, money management and a whole lot more. And we also have additional PowerPoints and handouts in each session, so you can get that 1 month as a bonus. So 8 sessions included in the $197. After the 1 month, if you decide to stick around, it's only $97 a month, where on the website it's $297. So you can get quite a savings, but you need to drop me an email should you wish to continue after month 1. So let's now get stuck into today's lesson. Now, if you've seen my videos before, you've heard me talk a lot about this, is you truly can become financially independent as a day trader. However, it's not easy. You've got to put the time and effort in to do this. Now, it's not rocket science either. That's one of the best things. It's really, successful day trading is all about pattern recognition and making sure you follow your money management rules and you trade the right time frame. And as an example, I'll just bring this up while I think of it. In today's session, I'm going to be on the 6-3 chart. Now generally I like to be able to trade the 4-2, which means a smaller stop loss and smaller account requirements. But as time picks up, you roll into New York, you need to increase the time frame. Now once I get to about 16 ticks, really above 12, that's too fast for me. I prefer to sit it out and wait for a slower market. And that's where I love the Globex market, which opens at 6 p.m. Eastern, where you can be trading, and depending on the market, if you're trading the ES, you're trading a 2-tick Renko, oil, gold. With most markets, you're down around the 2. As you get into the New York hours, you'll probably jump up to a 4. Nasdaq's different because of the volatility, and I used to call it the nasty Nas. I now call it the nifty Nas, because it gives you a great trading range, but you just need to really get to know the personality. Now I did mention that all of these principles here that I'm talking when it comes down to chart sizes, you can apply to any market. So you can also apply these exact same setups to tick charts, to time-based charts, to range. It doesn't really matter, but which is the right time frame? Whichever is tradable. In other words, it's got to be slow enough to be tradable. Let's talk about realistic targets. I've been day trading now for 28 years, and I see so many traders come and go, and it's usually because of disappointment or lack of discipline or money management issues. Traders, set realistic goals. If you're going to trade the after hours market, say if you're still working, a target of $100 to $200 to $300 a day is extremely realistic. Okay, unfortunately you have traders come in, they want to trade, say, oil, one contract, and they want to make $700 or $800 a day after hours. You just don't have the volatility after hours, but there's still some great trading opportunities. Now also, by starting off and achieving a goal of successful trading on the simulator, then going to a micro account with only $10 a day, then 15, then 20, what you're doing is building both confidence and competence. Now unfortunately, some traders now I know are probably switching off. They don't want to hear this, and they wonder why they keep struggling as traders. There's only one way to master the art of day trading, and that's by doing it the right way the first time. Now $5,000 a week or $1,000 a day would be a game changer for most people globally. That is the true potential. On only $100 a day, and wait till we get to the charts here in a few minutes, $100 a day by 10 contracts, you 10 full-size contracts, and you're there. You'll see today that I was netting, and that's my target, I was netting $300 a day per contract on the 6-tick. Now if I'm trading, just to clarify this, if you've seen my 4-tick videos, I look at the amount of capital requirement that I've got to trade. So on a 4-tick, I'm after 200 to 300 a day. On a 6-tick, I'm after $300 to $400 a day. I won't get into that too much now, but the big thing is 10 lots by only $100 a day. This is a full-time income trading part-time. Now where will you be in 6 months? Now this is where I want you to really focus on this. So if you want to master the art of day trading and you've only got a small account size, or if you've got a large account size and trading and you want to start trading, or trading hasn't been good to you up till now, let's draw a line in the sand and let's change this. Okay, yes, you've got to put some work in. I can give you everything but the screen time and the discipline. Okay, and perhaps we'll add a bit of patience to that, but let's look at this for a moment. Here, if we go down here, and of course you can pause this recording and read the full slide, but down here you can go for just $30 a day trading the micro, which is extremely realistic if you're applying patience and discipline. Now a micro account is 10% of the big contract. Once you build your accounts up, you can then roll over to a full contract, and I'll show you that on the spreadsheet in a moment. And the reason I mentioned that is some traders will look at the capital requirements, because to trade the 6-tick you really need $6,000. Why do you need $6,000? Because we never ever risk any more than 2%. So we could have a risk of up to $120. So and this is something where most traders want to get in there and hang on and hope they'll make it, but if you break the money management rules, it'll drain your account. But what that does is ruins your self-confidence, and it does all sorts of other things. More of that soon. And by the way, I want to try to keep this to 35 minutes. So what you'll see on my charts here in a moment, that yes, I do use indicators, and if you're a pure price action trader, I know that we can remove a number of these. Keep maybe the maybe my MACD and the EMAs for trend direction. However, what indicators will do is that they're a great confirmation tool, and so it just strengthens my resolve on taking certain trades. So in today's session, we're going to be looking at 5 trades I took. A couple of them I'm going to explain to you. One of them was a loss, and I jumped in another one straight after, which actually was what I call an impulse trade. So it's still a great day. However, what we've got to do with our day trading is apply what I call black box thinking. We've got to go back at the end of each day and review our trades. Remember, winning traders are willing to do the things that losing traders won't do. But when we look at our trades, we've got to apply this. What can I learn from this so I won't do it again? Now, I wish it was that easy. That is, there are things that I learned but I still will do, but I'm getting better and better all the time. That's why I look at it. But it's very, very important. Black box thinking, we look at it, what can we learn from this? And once again, losing traders won't do this. So when we get to the charts, I've actually removed all the lines in the copy, but you'll see the trade entries, because I want to explain in a moment directly on the charts what we're looking at. So the end result here was 5 trades for 4 wins, 1 loss, all within 15 minutes of trading. And there were some great trade opportunities which I'll show you just before and after this particular session. But let me just quickly give you an overview of how you can achieve the sort of targets I'm talking about, starting with only $600. Now, you could actually start with as little as $400 if you wanted to trade the 4 tick this is on the NQ. Once again, you can do the same with the micro OES, with the Russell. With the Russell, you can get away with $250 starting off, and the Dow. Why? Because we have smaller time frames. You don't have the massive volatility that you have on the NQ. But as we're about to see here, now in this particular case, I think I might have a typo there, but it should be 30. Yes, it is. So there's a little typo here on this one. So I've taken this off another slide here, but based upon $30 net within where are we here, within 12 weeks here on 30 a day, we've got $6,900 in our account. So how this table works, and by the way, if you want this spreadsheet I'm using here, go to the description link below and you can download this. And I've also got a little training video that's free, by the way, little training video on how to actually do this and use this spreadsheet correctly. So if you start off with $600 and you're targeting $30 a day, you start trading a second contract once you double your money. So once you've gone to $1,200, we can start trading 2 contracts. When we get to $1,800, we start trading 3. The end result here is by week 12, by netting $30 a day, and I'll show you how to do that in a moment, you've got the potential, and I have to say legally the potential of, well, just on this alone, earning $1,400 a week part-time, and your account size is now nearly $7,000, all within 12 weeks. Now, $1,200 a week part-time for many is also a fantastic income. Now, once we get to that level, we're now ready to roll over and start trading the big contract. So instead of trading micros, we'll then start trading a big contract where the commissions are cheaper, by the way. The equivalent is, I pay approximately, I think it's $4.20, $4.18 on the micro to trade the standard NQ. We're on a micro, I'm paying around $1.22. So if you're trading 10 micro contracts, that's the equivalent of $12.20 compared to $4 odd. And so that can actually, as a scalper and day trader, that can have a big effect. So certainly in the early days, you want to trade the micros, or if maybe the market picks up with volatility and your account size won't support, say, trading a higher time frame, you drop down to the micros. It's a real happy medium. Now what this really comes down to, by netting $300 a day, within 11 weeks we're trading 8 lots, and we've got the potential of over $10,000 a week income. Now it's great to have a compelling future. That's absolutely critical to your success, but what you then got to have is the how do we actually do it. Now when we go to the charts in a moment, and I'll explain this on the charts here, but if we're going for say 3 7-step trades a day, and I'll explain that on the charts, it's easier, or 4 6-step trades a day, that's our $300. And if you're following just trend following, that is using an entry chart, as you'll see I use, and an anchor chart, okay, you follow the tide, which is your higher time frame. It is so much easier to do this. So what I'm looking for on average is really the best of the best, and typically, look, I might have to execute 6 trades because you're going to have losses naturally. In fact, let me just quickly show you this little tool that I have for members just on this, because what I say to members is you really want to where are we here, just with this one just here. Most traders don't have a trading plan, not interested, and they're just flying by the seats of their pants. My job as your coach is also to help you put together a trading plan, a realistic trading plan with the proper money management rules. Yes, it might take you 6 months to 12 months to get there for financial freedom, but you've done it the right way. So just here with this profit calculator, and I'll just move it over to the side here a little, like if you're looking at oil in this particular case, and so this is just from a couple of days ago with some members. If we say are working on a 75% win-loss ratio, we're after $200 a day, and say if you average only 7, your stop loss is 8 ticks, only average 7, you need to execute 7 trades a day. Now all of a sudden, if it's a 1-to-1 basis, it's 6 trades a day. Now as a scalper and day trader, I'm rarely going for 3-to-1 returns. That is, if I'm risking 100, I'm not going for 300. I want to get in, get out, get paid. I'm a scalper. I feel a lot more comfortable doing that. It suits my personality. So this is where, though, maybe you want to go for the larger moves, and so we can do that by using higher time frames or staying with the trade longer, but this suits my personality. So if we now get back down to here, this is what we need to be executing. So let's now go to the charts. I'm just going to see if I got the little, no, I'll talk about I'm just seeing if I've got, is that it there? Yes, it is. Okay, so when this is what I'm really focused on when I get to the charts, and thanks now to most trading platforms, these plot automatically. So here, where are my pivot levels? Now I've now also added Camarilla pivots, what I call cam pivots, to my trading. For 28 years I've been hearing all about cam pivots, and they were invented by a bond trader back in the 80s. And really, look, if you put enough indicators on a chart, you're going to bounce off something, or enough lines. However, I've found them very powerful, and we may even we'll see what happens when we get to the charts. I can't remember, we'll see. But one thing I've now added, so I use standard floor pivots and cam pivots. I want to know where my prior days open, high, low and close levels, where the 89 and 200 EMAs are on not only my entry but on my anchor chart. This is priceless, as you're going to see. Intraday swings high and low, and the current days high and low. So let's look at this. Let me close that one down. So what I'm going to do here, traders, for a few minutes I'll leave up my anchor chart on the right. So I actually work with an anchor chart, sorry, an entry chart, anchor chart 1 and an anchor chart 2. So because I've got multiple screens, it makes it a lot easier. However, and if you're wondering how many screens would be perfect, well, really 3. but two you can get away with, even one you can get away with and have it like this. But I prefer to have my entry chart fully expanded like this, and then straight in my screen above, 2/3 of it with my anchor chart 1 and 1/3 with my anchor chart 2. Remember, I'm surfing the waves. I want to see where the higher time frame is going. So just here, we're about to see in a moment the trades that I took, and what I might even do, just turn the camera off for a moment and let's just focus on this, because some of these may pop up over here. So first of all, just to give you an idea why higher time frames are critical, this is what you call a 200 EMA overshoot, and up here this is current day's open and yesterday's close. Note the bounce, but look over on my anchor chart 1. I'm also bouncing off one of our major EMAs. That makes this what we call a loaded trade. We then came down, we then bounced. For members watching this, you've got a T10 there, you've got a T10 there, oh, you've even got one there, and you've got one here. Now a T10 trade is a very high probability reversal strategy. Okay, so you're applying that to your reversals. Now what I want you to notice here is a Camarilla pivot, and this is an S1. We come down and we get a clear bounce over here. By the way, this is the low of day. But once you understand these patterns, and patterns that repeat day in day out, it makes trading so much easier. Now as we're popping up just here, so now we've had a bounce, you've got what we call a T10, and just over here do we get a setup, and now we've got a little bounce here. Okay, we've got a double top, and just there I get another entry. Now this is called a long-term stochastic. Okay, and up we go. Now note up here, this is a standard pivot, so you'll be able to tell the difference. One of my standard floor pivots, you'll see they're dots. With a Camarilla pivots, they're dashes. Okay, so if you're wondering what am I bouncing off at the time, that's what that is. Now as we hit a pivot, and let me now expand this. Okay, so what I'm looking at is what's also happening on my anchor chart, but let's focus on the entry. A very large percentage of the time when we come up and we come up there and we hit the pivot, a very large percentage of time we're going to get what we call a pivot bounce, where we bounce off the pivot. Okay, so whether it be a cam pivot, whether it be a standard pivot, and just here. Now I know, yes it is, I thought so. So just here I actually had a trade entry, and it's called a 2D. That is because I had divergences on my higher time frames. I've even got a wee bit of divergence just there. Okay, little hard to tell with this, but we had it on our anchor charts. Okay, so then I entered this trade just here, and I'm after my what I call 7 steps. Now if I missed that entry just here, I had another one just there, and I had another one just here. Now little challenge with these ones is that as I'm selling directly at support, now they did pop through, but I was getting a wee bit worried about those trades at that time. So now I'm out of the trade. Now this is where a lot of traders will ask me, don't you wish you trailed so you could pick up these big winners? You see traders, each one of these, and I should just point this out, I call these steps. So these Renko candles, the great thing about Renko, they smooth out price action, and once you get to know and trust them, there's no going back. You'll love them. So a 6-tick Renko means from the low to the high, that is 6 ticks, which is $30. Okay, now each one of these steps, I call them steps, is $15 then. Okay, so you're basically going down in steps. So to go and instead of getting up here from down to there, which is $110, 22 ticks I was after, I could probably go and double that again. and here, but I prefer to get out and then just look for another entry. Okay, now as we come down, what have I got just here? I've got a cam pivot again. What do I expect usually to happen? I expect a bounce. Now here in this case we had a wee bit of a bounce and then we continued straight through. Now just here I then had what we call a T3 setup. A T3 setup, traders, is a reversion to the mean, or a mean reversion trade, when we are a certain distance away from our 34 EMA and it kicks butt. And the best thing is you don't need divergence on your charts. And by the way, this is what I call a zero lag MACD. So here I had a T3 and I was also bouncing off the 200 EMA on my anchor chart too. So this all of a sudden became what I call a loaded trade. Slight overshoot, bouncing on a higher time frame, and away I go. And I was filled and out there at the 200. Now as I'm coming up, guess what I'm thinking? With any trade we say to ourselves, do I have blue skies ahead? And what exactly do I mean by that? What's in front of the trade? I'm always looking for my support resistance areas. Now a lot of these areas are zones, by the way. Okay, you're not going to bounce usually right, or you do bounce at times right on the tick, but overall I'm looking for an area. Okay, went through by a few ticks, you bounce, little bounce, now we're flying through. And by the way, that was, as I mentioned, a 200B on a higher time frame. As I'm now coming back up to the open and close, guess what I'm now expecting? And I remember what happened early today with this trade. I put in a stop limit order. Now a stop limit order allows me to specify the price I'm willing to pay, but it's not guaranteed to be executed. So in other words, I can be filled at the price I select or better, but no worse. And what actually happened was I hit there, put my order in to short 5 contracts, and it just went through without me. Okay, and I wasn't filled. And this is one of the problems you can have with stop limit orders. Now I can go with a limit order which turns into a market order, but you'll quite often find you're going to get 1, sometimes 2 ticks slip. So probably 5-6% of the time that will happen where I don't get filled. It can be frustrating. Like that was a beautiful 7-step trade. Oh, and one thing I didn't mention, that's right, I target usually 7 steps. 1, 2, 3, 4, 5, 6, 7. My break even is 5 and I target 7. Why? Because that works for me. I've just found over the years that's just a really great target. Okay, I missed that one. I then jumped in, and this was the clanger of the day. I then immediately missed out on that one and I shorted right here. Now traders, we're very cautious when we sell straight into pivots. So what I had here was a cam pivot straight below. I sold and I was immediately stopped out of that, and I was really peeved because I press this home to members day in day out. If you're going to sell into a pivot, get to break even when you can, but make sure you've got room to the pivot, otherwise quite often you just bounce straight off it. And so that's what happened here with this one. So I was really peeved about this one. Now what about this one then? I was buying under the pivot, yes, but I had major reasons for doing that. That basically is what we call an overshoot, a pivot overshoot. I was bouncing off a major EMA on a higher time frame, and it was a T3, so that made that a definite trade. So I got stopped, and then straight after that I jumped in on this trade. This is all within seconds, by the way. Okay, and with this trade, yes, it worked out mighty fine. However, traders, I should have not been in that trade until down here, or until after this formation here. For members watching this here, you can see we had a little bet the farm set up there. So I entered way up here. It should have been down here, and I was a bit peeved with that because I should not have taken that. But anyway, it worked out mighty fine. And then as I came back down, I hit the pivot. Look at that there, another little pivot bounce. And once again, I teach you how to trade pivots. And down here then I had right there, it wasn't quite a T3, but it was a T12 on the anchor chart 2 again, a bounce off for 200, and I had divergence on the anchor chart 1. Okay, so that was just there. Let me just see. So I had lower low on price, I had a high high. Now this is very sensitive, so like see that there to there. Okay, so that was that one just there. So the MACD here that I use is very sensitive. Okay, and we're in there, and thank you very, and for members watching, yes, it turned into a T10 just there. So if you missed that, you then had a T10, and away the market went from there. Now just to point this out, if I had this trade here, I would have been no, I would have been out at break even. Let me just mention this. This is one of these trades where you're bouncing off support. Remember I mentioned about pivots a moment ago? This is your classic case. You enter the trade, you'll be in about here, by the way. As soon as you hit the pivot, or nearly hit the pivot, and I don't want to get into front running now, so usually it's 2 ticks under. We want to lift our stop up and go to break even. Now if I was up 5 steps, I automatically on my dome go to break even, but here we're only up 2.5 3 steps. So where my stop is 1 tick below here, as soon as you hit there, you bring your stop straight up. Why? Because of this. That was the issue where I was peeved with that trade I took there, where I was really I didn't even have room to get to wouldn't have even barely had room to get to break even, and it bounced. Now what have we got here for members watching? There is your classic 3B just there. Okay, we then rally up, and what have we got just here? Just there you got a higher high on price, you got a lower high, and there is another T10 just there. Okay, a really good T10. Now with this trade, was this a double divergence? Well, let's have a look. And yes, it was. Okay, sorry, gotta clap my hands. See how we missed the cam pivot by a couple of ticks? What we've got here, I call these 2Ds, and 2Ds means 2 divergences. Okay, so you had divergence on your higher time frame, you had it on your lower time frame. Now what I've discovered, and just really just through experiences, and I've removed it here, it's a little trade secret members get to know, but the settings for all the different types of charts you're going to be using, because what you end up getting is multiple EMA bounces together, which loads your trade. Imagine when you've got multiple entries on 3 different time frames all saying take me on 3 time frames, and when you've got multiple divergence trades as well, that's what we call a loaded trade. So traders, it was a great session. 2 errors I made that still worked, or 1 didn't. It was a loss. Well, they're actually, and it wasn't my fault we didn't get filled there. As I said, that just went straight through my order, and maybe that's where it clouded my judgment, because this is all over in about 40 seconds, by the way, and that's that trade I then got stopped. So traders, there's a fantastic opportunity the markets offer you as a trader, as long as you've got to put the work in. And that's probably the most frustrating thing I have with traders, is they're just not willing to do that. You know, you can't be merely interested in day trading, you've got to be committed. Now I'm not talking about putting 8 hours a day into this, but you can be trading just 2 hours a day. That's all you need. Now yes, I do have to say my results are probably not typical, but I'm also committed. If you're a committed trader, okay, I believe you can expect the same sort of results because traders, it's not rocket science. Everything I do here, they're all patterns. Every single setup is a pattern. Okay, there's nothing that I do is based upon, oh, you know, is that good? I'm looking at either EMA bounces, or I'm looking at pivot bounces, I'm looking at angulation, but they're all patterns. So traders, why don't you come and join me? $197. I'll train you over a month. If you decide to continue after that, it's only $97 a month. Cancel anytime, and when you sign up, you're not actually signing up for the ongoing class. And as I said, it's literally a gold mine of resources. So traders, it's time for me to wrap this up. Hope you enjoyed today's video, and I'll see you hopefully in class. Cheers everyone.